Every now and then, a story comes out that makes me remember why I love investing in real estate and not focusing on the stock market. Now, many of you may know that the beginning of my career in the financial world was looking at the stock market and trying to focus on investing similar to the way that Warren Buffett, Charlie Munger invested in the wake of 2008. There was a lot of value to be had. So I was very excited to get some excellent discounts based on historical standards, but quickly found out that I was just not a fan of the volatility. Volatility is the enemy of being able to predict the future. Volatility is the enemy of that predictability, just generally. And from an emotional standpoint, it also just didn't work with my personality. It took me quite some time to figure that out. But once I did, I knew real estate was likely the most direct way to accomplish the goal that I was setting out to accomplish, which is cash flow to pay off expenses so that I no longer had to work. That's most people's definition of financial freedom. And I think we can all agree that real estate is likely the best way to get there. In fact, I have said it before, I think that the passive approach to investing is the only way to get to financial freedom. And I know that's up for debate. However, let's talk about the stock market. A lot of people like the stock market because there is liquidity in the stock market. Now, that liquidity is a major benefit because you can buy and sell as you wish. And if there's a change in the market dynamics, you can exit quickly. The challenge, though, is that liquidity comes with the volatility. That's the reason price fluctuations take place, because money and shares are exchanging hands. And that is not just because it's the real estate market versus the stock market, because the REITs, publicly traded REITs, which tend to be less volatile than the stock market, still have a lot of volatility. You tend to find that they will move in direct correlation with the stock market. So volatility, again, is more about the fact that you can actually see valuations constantly changing, which is why people tend to be glued to their computer. You wake up in the middle of the night looking at your phone, looking at your stock portfolio, because of the fact that things are going on behind the scenes and deals are being made. Now, of course, our deals, ASIM Capital's, they're not publicly traded. So the inclination to wake up every morning and check your phone to see where your private real estate portfolio is going is not something that our investors are doing. Now, that alone may cause us to be sympathetic to the world of investing in private deals, but that's not the only reason that we like it. Now, as of the recording of this podcast, April 30th, we're in the bit of a crisis surrounding a global shutdown as it relates to concerns around COVID-19. So a lot of businesses have decided to keep their employees working, but are having them work from home. And since a lot of people are missing the person-to-person interaction, a lot of companies have decided to take their meetings online. In fact, a lot of businesses that are already remote, may typically be doing phone calls, now have moved over to be doing online meetings. And Zoom is a company that's gotten a lot of attention recently. So what's happened in the stock market? Well, Zoom Technologies started making serious moves toward the middle of February, right when the market started to get a sense that something was going on and that something might be coming. Towards the middle of February, it was up about 100%. Then, as it started to become clear that this is going to be a big deal globally, it spiked up another 500% from its original price in January. Then, as we started to see more and more negative things coming out in the media, the situation in New York is really bad, etc., by the end of April, Zoom Technologies went all the way up 1,500% from its price in January. Then, out of nowhere, it fell about 67% from its all-time high and bounced off about 5 times where it was just in January. Then something really special happened. The SEC halted trading of the stock. Why? Because Zoom Technologies, which has the ticker Zoom, Z-O-O-M, is a research company that sells electronic communication products for mobile phones. And the SEC believed, rightfully so, that it was creating a massive confusion between Zoom Technologies and Zoom Video, which is the company that a lot of people use to conduct, quote, Zoom calls. Now, Zoom Video uses the ticker ZM. Now, a lot of crazy things happen in the real estate game. Properties can go vacant, demand can go down, a new development can open up right next door, But when was the last time you heard someone say, I meant to invest in a self-storage facility in South Florida, and instead I inadvertently invest in a bead manufacturing plant in Idaho? This is the kind of thing that reminds me of the flash crash of 2010, which lasted about 36 minutes. There was literally a glitch in the data inputs, and it caused the entire Dow Jones to fall more than 9%, bounce off the lows, and come right back to where it was in the middle of the day. I was actually watching CNBC randomly when this happened. I remember I was actually eating. I literally jumped towards the television at it start to happen. In the process of jumping, put my food on the ground and just couldn't believe it. I literally was glued to the TV for the 36 minutes while people were trying to figure out what was going on. The anchors of CNBC speculating on what was happening. And a few of them were saying, this is actually a glitch in the machines. That's the term that they used over and over again. Still, it isn't 100% certain what actually took place that day. So the lack of liquidity is a gripe against real estate. I understand that. But that lack of liquidity creates stability, both from a financial standpoint as well as an emotional standpoint. But the craziness that takes place in the stock market when it comes to confusion and misinformation and glitches is just a thing of its own. So, are you willing to exchange some of that liquidity for stability? And are you willing to exchange some of that craziness for asymmetric returns through private real estate deals? I think you know where I stand on the matter. All right, listeners, you know the routine. This show is all about learning, making wise investments, and protecting and growing your capital. So if you're interested in these topics, make sure to hit the subscribe button. Of course, if you've already enjoyed a couple of great episodes, don't be shy. Leave a review. It really helps the show's visibility. And lastly, if you're an accredited investor and you're interested in learning more about our investment opportunities, the types of deals that I personally invest in, go to asymcapital.com. That's ASYMcapital.com. Thanks a lot.